Home improvement loan versus home equity line of credit. Thinking about starting a home improvement project? Most people don't have money saved up to do home improvements. Sound familiar? Borrowing money is a great option if you do your homework. Let's take a deep dive at understanding two of the most popular ways. Home improvement loan versus home equity line of credit. Home improvement loans. Let's go over the fastest and easiest option first. Home improvement loans are extremely popular and for a good reason. Let's face it, home makeover projects are expensive. Many homeowners can't pay cash or do not have equity built up in their homes. Many folks like yourself finance home improvement projects with an unsecured loan instead of using their credit cards. Home improvement loans don't require your home as collateral, which is a huge advantage. These loans are backed by your personal income and credit history and are extremely easy to get, even with below average credit scores. How fast can you get money? Home improvement loans are the fastest way to get money. The approval process is easy. A simple 5-minute online application will get things started immediately. Depending on how much money you need and how quickly you respond to the lender, you can have money in your bank account as fast as tomorrow. Are interest rates competitive? This financing option has competitive fixed interest rates, so there won't be any increases in your interest rate down the line. The payback agreements are generally short-term loans, 1 to 6 years, so the amount of interest you pay for the borrowed money is extraordinarily less. Flexibility is also a major win for this personal loan option. Once the money is in your hands, you have the power to do whatever you want with it. If your project comes in under budget or your plans change of how you want to allocate the money, you can use the funds however you want. It is important to educate yourself about home improvement loans. Borrowing money is something that can put a big strain on your monthly budget and even cause unnecessary financial stress in your life. Home equity line of credit. The home equity line of credit loan is a secured form of credit. The lender, oftentimes a bank or credit union, uses your home as a collateral guarantee that you'll pay back the money you borrow. If this is something that you can live with, this might be a great option for you. It's a revolving line of credit, similar to how a credit card functions. If you plan ahead and have plenty of equity built up in your home to weather a downturn in the housing market, a home equity line of credit is a great way to finance your home improvement project. How fast can you get the money? The process is similar to applying for a mortgage. Typically, the lender will evaluate your credit worthiness, which can be done filling out a form online. When that is approved, there are terms and conditions to read and sign. From there, a third-party appraisal is scheduled to ensure that there is enough equity available. The whole process can take 30 to 60 days, which in the whole grand scheme of things is not too bad. Are interest rates competitive? One of the biggest advantages of a home equity line of credit is the interest rate. Since you are putting up your home as collateral, financial institutions view this as a lower risk loan. The interest rates are generally variable, so it is important to know that it is very likely to get more expensive the longer you owe the money. Most home equity line of credit loans have a 25-year term, with a draw period and a repayment period. The draw is typically 5 to 10 years, followed by a repayment period of 10 to 20 years. If you are responsible with your money and have the willpower to make a repayment plan and stick to it, then there should not be any issues. Oftentimes, lenders will offer interest-only payments, sometimes called repayment freedom, which will allow you to make much smaller monthly payments. This so-called freedom obviously comes with the inherent risk of owing more on your mortgage than what your home is worth if you need to sell your home unexpectedly. Flexibility is probably the number one reason people choose the home equity line of credit loan option. Much like a credit card, there is a line of credit that you can borrow from anytime. There are no requirements or documentation on what the money is used for. If you go over your budget or need emergency money, it's as easy as logging into your bank accounts and transferring money. It is important to educate yourself about home equity line of credit loans as it relates to the risk of losing your home. Understanding these risks ahead of time will reduce the likelihood of any catastrophic scenarios. So now what? Which loan is better for you? Now that you have compared home improvement loans versus home equity line of credit loans, there are important benefits and risks to consider. For borrowers who have equity in their home and are confident they can make the loan repayments, a home equity line of credit offers competitive interest rates and oftentimes less out-of-pocket money each month. However, if you do not want to be putting up your home as collateral and just need a quick and simple way to get money, a home improvement loan may be a better option. Want to get started right now? Simply fill out the form that takes just a few minutes on lendercard.com. Get your project started today.